Right then. Good afternoon, everyone. How is everyone doing? Let me know if there's any issues. This is my first time going live on YouTube. Should be good to go though. I don't think there is any issues, but as I said, let us know if there is. But yeah, how's everyone doing? I'm back from my hiatus, a few weeks off from the live streams, just to wrap my head around things, and I was traveling as well, but I really wanted to nail down my strategy, just refine a few things, a few tools, and just get my head around things. Now, if you don't do that as a trader, you're going to suffer, you're going to end up burning out eventually. You do need to take these times to review your journal and stuff like that. But yeah, we are trading in New York. Just give me one sec. Your voice keeps echoing. Right, okay. Alright. Is this better? I think what happened was I did have two mics on. I had my laptop mic and my, actual mic. I've got rid of that now, so it should be working. Is that good, guys? I go live, New York, every day at this time, every Monday, Friday, and obviously in the premium is basically London streams. So we do a London stream starting tomorrow. We do a London stream at 7 a.m. UK time in the premium chat on Discord, and then on YouTube at 2:30. New York session is when we will obviously do the New York trades. Right, so what we'll obviously start doing is looking at the fundamentals. We do this every day. We just look at the fundamentals for today. You can see there's basically nothing to worry about anymore. There wasn't really anything to worry about anyway. We've had the big weeks. We've had the second week of the month. We've had, the CPI, PPI, all that stuff. We're coming towards the end of August now, which is time's going so quickly. But, there isn't really much to worry about. We've got USD consumer confidence at 3 p.m., which isn't too big. But as I said, it's red folder. So we've got to just keep an eye out for that. But nothing else all day really. Now I haven't taken any trades today yet. I'm not too sure if we will be able to, simply just because of the time. We'll have to give it like 10 minutes maybe, just to calm down after basically the New York Open. But I haven't analysed this week at all. I haven't traded this week. So we're going to just, get started on the same page, really. If we start off on the weekly, if we just look at what's going on. So, previously, historically, we were just, extremely bullish. And then coming into July, literally the first week of July, or the second week, really. Second week of July, we just started this massive bearish downtrend extremely quickly. Which obviously has left some imbalances. So we've got a couple weekly fair value gaps here, and in this move down, we did in fact also invert some bullish fair value gaps on the weekly time frame. If you just look to the left hand side, you can see there's a couple fair value gaps. There's one here which we've inverted. There's one up here which we've inverted. But what we're looking at is this move down. So we've got a weekly fair value gap right here. So we are currently inside of a weekly fair value gap, which we're looking to respect. We do look like we are trying to respect it. We've got 3 top wicks all at the same high. So we have got equal highs on a lower time frame. What we're really waiting for is some form of, maybe an engulfing candlestick, or just a big candlestick in general that's bearish, closing this week. So that we can, have it's clearly shown that we're respecting this fair value gap. Does that make sense, guys? So if we can close down here, let's say we close down here at the end of this week, we've got 3 days left. If we close down here, then what that would look like is obviously an evening star candlestick pattern. So if we just draw that kind of thing out now, that's what it would look like, something like this. And that is an extremely bearish sign. We're respecting a fair value gap, and we've also formed an evening star candlestick pattern. That's what we would want to see for us to, be more of a long-term bearish kind of thing. Right now, we don't really know what to do in terms of like a long-term bias. We don't really have one. It's we kind of just got to see how price reacts to this, basically, because what's happened is we've been bullish. We've been bullish for years, to be honest with you. And then all of a sudden, we've just created this massive move down. Just in the space of a few weeks, we've wiped out weeks and weeks of gains. So we've wiped all that out, creating some imbalances, and we want to see how we react to these imbalances now. If we start respecting these fair value gaps, or this fair value gap and this fair value gap up here, then obviously we're going to be more bearish overall. We can start looking at, taking out this low over here, then maybe targeting some form of fair value gap that's around here maybe. And that's if we respect this fair value gap. And if we disrespect it, then, we can expect price to continue being bullish like it has been for the past, 10 years or something stupid. But so that's what we're seeing on the weekly. We've got this bearish fair value gap here. We've got another fair value gap up here. And what you can do is sometimes, so you see how there's two fair value gaps. A lot of people will be very confused on which fair value gap they want to trade. You don't know whether to wait for price to respect this one. You don't know whether to wait for price to respect this one. Now, the safest thing to do is obviously just to wait for this one. You can't really go wrong doing that. But the way I do it is basically just go up a time frame. So if you can see, we've got a few fair value gaps right next to each other in terms of candles. We've got this one here, and then the closing candle on this fair value gap is the expansion candle on this fair value gap. So they're quite close. Not only in terms of price, but in terms of the candlesticks, the one after the other, basically. So we go to the monthly. If we just find the monthly, you can see that we do in fact have a fair value gap being formed, which we've got 4 days left on. We've got this one here. So if you were worrying about, let's say you're on the weekly and you're worrying about what fair value gap to look for and what fair value gap do I wait for price to come to respect. When there's multiple fair value gaps like this, go up a time frame. If there's still multiple, go up another time frame. Just keep going up until there's just one, because there more than likely will just be one fair value gap somewhere. And that's the fair value gap you want to really listen to. So what we'd want to see is basically price can do multiple things. It can either respect this fair value gap, disrespect this fair value gap, and respect this fair value gap, and then continue down, or it can disrespect this one and continue up. Now, in terms of what I want to be looking for, obviously we just kind of want to trade what price gives us and what we see in the markets and what the market shows us, not really what we want from it, if that makes sense. But what I'm expecting to see, if we disrespect this fair value gap, I'm hoping we can just kind of stay respecting this one. I don't think we'll come back up to this one. What I'm expecting is, as I've just said, to close bearish here on this candle, maybe around here somewhere, strongly respecting this fair value gap. And if we don't do that, we can wait for price to start respecting or disrespecting this fair value gap. So just to summarize that, ultimately what we're looking for is price to respect this fair value gap. But what we could get is price just respecting this one and then continuing down. Because it does actually have to form the fair value gap, if that makes sense. This fair value gap isn't valid yet, simply just because it's the third candle hasn't closed. Once that third candle's closed, then we can come in and respect it. So we could end up even just consolidating for the rest of the week before we actually come into this fair value gap, respect it. Once we've actually, formed it and it's valid and all the candles are closed, we would come into it, respect it, and then continue down. But as I said, you want to use the weekly, the daily, the monthly for your bias. So we just move on to the daily now. You can see we have kind of just been consolidating. But if you look to the left, you can see we've been consolidating inside of a bearish fair value gap. And what did I say about 5 minutes ago, if that? See how many fair value gaps there are? Literally one after the other, guys. 1, 2, 3. I think there's even 4. Oh wait, no, it's not 4. That fair value gap isn't valid. Right. So what people would see here is, what the average fair value gap trader would see is literally just this fair value gap's been formed. We're going to wait for price to come to this fair value gap, show signs that it's respecting it, and then maybe get in for a sell position. Now, if I was to just trade like that with no other confluence and just blindly trading fair value gaps, I would have took a sell position around about here, simply because this has no wick. So because of that, I would have took a sell. And as you can see, I would have got stopped out there. Now, how do you find out which fair value gap to respect? Move up a time frame. You go to the weekly and you can see there's a fair value gap right here. So we would wait for price to respect this one. Does that make sense? So we don't even need to use the daily time frame today, because there's too many fair value gaps. We just kind of want to be looking at the at one fair value gap, which is obviously on the weekly. So we've got that fair value gap there. The 4 hour again, consolidating again. Basically, some form of external accumulation. If we just draw that out, external accumulation, as you can see. Now, if we move into the hour, it's basically the same thing, just a consolidation. Obviously, there is going to be a lot of internal cycles of AMD here, which we are going to be looking at now because we are on the 15-minute now. But that's what's going on the high time frame. So now we know exactly what the situation is. We want to kind of trade that situation, if that makes sense. So we are really looking for sells more than anything, because I kind of want to end the week bearish. But now we need to look for those confluences to actually find that trade, and as you can see, pretty straightforward again. What I'm going to do is, though, I'm just going to get rid of this external AMD. We don't really need to worry about that too much, because that will obviously be playing out tomorrow, tomorrow, Thursday, maybe even Friday, so we don't really need to look at it. But if we look at this now, you can see we've got perfect accumulation here, which was, if you look at the time at the very bottom, I'm in UTC +1, so and it's I think it's 24 hour clock. So that's early in the morning for me, which is Asian session. As you can see, for Asian session, we did accumulate. Then coming into London session, literally on the 8 o'clock candle is when we broke out of this accumulation, manipulating to the upside. Now, what did we manipulate into? We manipulated into a previous accumulation, which is obviously a strong sign of a move in the opposite direction, which we did get, which would be looking to complete. So what we're looking for today is to complete the distribution move, and that's as simple as it gets. Now, I probably would have caught this move, if we were trading earlier, but I wasn't trading. I had a massive break. I think it's like 3 weeks, really, from trading. I've made money here and there, but, nothing too serious. This live, sorry, 1 sec, guys. Oh. Right, let me just... Oh, that's really blurry. Is that the highest it comes in? Jeez. Alright, I'm going to sort that out for tomorrow, guys. I don't know why it's in 480p. That's ridiculous. Alright, my bad about that. Hi, Josh. I love your strategy to bias back. Yeah, no worries. So the way this would work is you literally just go to the daily time frame, and look at the daily candle. So whenever you trade, literally doesn't matter if you trade the middle of Asian session, the end of New York, the start of London, whatever it is you trade, whenever you go on the charts, try and pick the same time every day. But whenever you go on the charts, just look at the previous daily candle and the previous 4 hour candle, and that is how you form your bias for the next 4 hours, or the day, really. So we go to the daily, you can see the previous daily was slightly bullish. I'm going to call that mixed, to be honest with you, though. That's a doji candle there, really. Not a bullish candle. Then you go to the 4 hour and see that the previous 4 hour is extremely bearish. So we've got a mixed daily and a bearish 4 hour. So we are slightly bearish today. So that's the daily bias sorted. But yeah, move to the 15 minute. This is what we want to see. So we want to finish the distribution move. Now, where do we want to actually target? So there's a couple places we can target now. We can target this area, which isn't going to give us the best trade, really. Or we could target this over here. Now, this is what I want to target, really. So how would we actually target that? So let me just change the color of this to gray, right? So we've had our accumulation, blah, 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 blah. What we're looking for now is a continuation of the distribution move, and there's two ways we can get into an entry. So that we can take a blind entry, or we can take a sniper entry. Well, sniper entries are bollocks, to be honest with you. You know, they're not that good, but it does help. So what would be a blind entry? So blind entry would just be entering here, and we could enter here. Why? Because we have formed a bearish fair value gap here, with a bearish Marubozu candle being the expansion candle, which is, you know, quite a nice confluence. And then exactly what I was talking about on the weekly time frame, exactly what I wanted to see is exactly what we've got on the 15-minute time frame. On the weekly, we formed a weekly fair value gap. We'll come back to respect it, and I want to see an evening star candlestick pattern. Yeah. Now, on the 15-minute time frame, you can see we formed a bearish fair value gap again here with a Marubozu expansion. Then came back and respected it, as you can see right here. You know, it is a bit sloppy with the wicks and stuff, but, you know, it's a valid fair value gap. Who really cares if a wick is covered? Anyway, we formed an evening star candlestick pattern here, so we could literally just take our sell position right here, right now, with our stops just above here and our take profit right here. And we could do that. And I'm liking it, to be honest with you. I'm liking it. Let's see what the lower time frames have to offer, though. And also, if we go to the left-hand side, there is a fair value gap right here, which we hadn't respected yet, which we've come back into. So we kind of want to be waiting to, start disrespecting that before we take a sell position, which means we'd probably be looking at an entry around about here, which means we're looking at a risk-to-reward ratio of about 0.8, which is not worth it at all, unless we can find somewhere else to place our stop losses. But that's the best place to put them. But what we could do as well, even, is go to the 5-minute time frame, and there's no real fair value gaps there, so it doesn't really matter. I was going to say we could wait for price to come back to a bearish fair value gap if it's formed one, but it hasn't. On the 5-minute, it has completely respected this fair value gap here, so we're going to have to wait for that to be disrespected before we make any more moves. Sorry. But yeah, I hope that makes sense, guys. We're going to be waiting about a couple of minutes to see how this plays out. But this is what we're looking at. We're looking to continue the distribution move down to this liquidity over here. You know, pretty standard stuff. But now we just kind of wait to see how price reacts to this. And fortunately for us, we do have a trading zone. We have got a trading zone, which means we know exactly what to do. We don't want to waste any time. And the trading zone is obviously this area around about here. So if we start respecting this fair value gap over here, if you can see that fair value, if we start respecting it, which we have done, that's obviously a bullish confluence. And then if we start disrespecting this fair value gap up here, that's another bullish confluence. So if we start disrespecting this fair value gap up here, then I'm not going to be looking for sells anymore. Does that make sense, guys? And if we do start disrespecting this fair value gap, let me just get rid of this at 5 seconds an hour. Right, okay. So if price breaks above here, the way it would have happened, or the story would be, we've respected this bullish fair value gap and then disrespected this bearish fair value gap, which is obviously a strong bullish confluence. Now, there's another confluence to be bullish, and that's the expansion. We are trading in the distribution move. It could end at any moment. It would have been better to take this trade up here, which is exactly what I would have done if I was trading, but I wasn't. I was waiting until New York. But, yeah, as I was saying, if we start breaking above here, I'm done. Now, for an entry, to get an entry, to start looking for an entry, if we start disrespecting this, and by disrespecting, I mean closing below, not edging, like not wicking it. I mean properly closing outside of it for both of these. So we've got to wait, just let that happen, let that play out, see what happens, and then we will take action based on what's happening. But that's pretty much it, guys. Like, this is the art of trading. Spend 20 minutes looking at the chart, drawing some boxes, and then now we just got to wait. And if price can meet our setup conditions, then we get to make some money today. So, the art of trading. Thank you, did help. No worries. But yeah, guys, has anyone got any charts they want me to analyze? Make sure to like the stream as well, please. Make sure you're liking the stream up if you're enjoying it. Obviously, if you're new here, make sure you're subscribing. Make sure you're in the free Discord as well. If you trade like me, make sure to be sending in your analysis as well. Sharing your analysis is probably one of the most important things. It's helped me. It'll help you as well if you do it. It's one of those things, one of those actionable steps. But yeah, make sure to like the stream and subscribe if you haven't already. But now it literally is just a waiting game, guys. Just got to wait for price to meet one of our conditions to either take the trade or not take the trade. And then we take the trade or don't take the trade, and then we're done for the day. Pretty easy. If this goes well, we should be making about $500, $1,000. Can't complain. But yeah, that's it. I'm not really sure what else to talk about now, guys. So if you've got any charts you want me to analyze, send them in. Tell us some pairs to look at. Gold. I know a few people trade gold and Bitcoin. But yeah, GJ's been consolidating for quite a while now, hasn't it? Because that's when I had my little break. It's been consolidating for the past couple of weeks, like August 15th, yeah, almost 2 weeks. Oh well. We should get a big move soon. We probably will manipulate, though, externally. If we're accumulating externally, we will. GBP USD. Alright, no worries. Alright, then let's see what GG's doing. EU as well, alright. So what we'll do is we'll have a look at GU and then we will look at EU and see what's going on there. So obviously, straight off the bat, extremely, extremely bullish. I don't know if you've ever used an RSI before, but that's basically the equivalent of overbought. We probably are going to have some form of correction. Now, when we have this correction, where's it going to go? So is this fair value gap here? There is a fair value gap here. A fair value gap right here as well. Oh, and there's one in between both of those. Let's just draw these out. So many fair value gaps. So what did I say before, guys? Go to a higher time frame and look for one fair value gap. Easy peasy. Now we're on the weekly. That's basically it. We want to wait for price to come back down to here. We've took out this liquidity over here on the weekly. So we took out some external liquidity, which means we're probably going to be targeting the next external liquidity, especially if we've been consolidating. Sorry, that's a break of structure. No, it kind of is a break of structure as well, but we're going to call it liquidity for now. If we took that liquidity, we've got a fair value gap here, which we've got obviously like 4 days left on. And then if we form that one, then you just want to go up to the monthly and basically kind of try and do the same thing. But obviously it doesn't really look like there's going to be a monthly fair value gap. So you're just going to have to listen to these ones. So the safest thing would be, if this fair value gap forms valid, closes valid, sorry, then you want to just kind of wait for this one. You want to wait for price to come back to this one. And you got to do that simply just because there's no fair value gaps on a high time frame, because it's not formed, it's too long. It's happening too quickly, basically. But that's what I'm seeing. So, externally bullish, internally more bearish, short-term bearish. We've took this liquidity expecting a cool down. We've formed a fair value gap expecting a cool down, coming back to this area around about here. So what you could do is, there's two things to do. You can look for sells and take sells, but I'm assuming your bias is bullish. My bias would be bullish as well. So what I would do is wait for price to come back to this fair value gap over here, or form a monthly one and respect that one. This is obviously if you're trading this weekly, but you want to wait for price to come back down to here and then take a buy position on the weekly. But right now, you kind of want to be looking for sells more than anything. Extremely overbought. Now if we go to the 15-minute time frame, it's routine. We look for most recent consolidation and follow price basically until we get to the most recent price action. So you got this right here. Went straight to an accumulation, went straight from an accumulation to a distribution. As you can see right here. Which means that we've got two things. We've got two scenarios. We could either have a expansion candle, which is literally just like an expansion or reversal of the distribution move, or we could have another accumulation. But we haven't had that accumulation. We've in fact had a reversal. We came back towards this area, but it could also be like the distribution move still happening. So what you want to do there? Oh, my voice echoes still. Good afternoon, Juan. I hope you're doing all right. Guys, let me know if I'm echoing. Someone said I was, but I think they deleted the comment. No worries. But yeah, so GU. What's going on here is, and what I advise is basically just wait for a consolidation before you try and trade this. It's too iffy to guess. Like, if we were accumulating, you can go, okay, I'm expecting a manipulation move now, or I'm expecting a distribution move now since we've just finished manipulating. But what's going on here is we've accumulated, distributed, and now we're kind of just in like basically what I like to call no man's land, where it's kind of like nothing's going on. Like there's nothing to wrap your head around really. So what I would do is wait for that consolidation to occur, because it's going to occur. It will. Don't get caught in it. Just sit on your hands, sit here, whatever. Wait for that accumulation or the consolidation to occur. Then wait for the manipulation and then trade that. So you basically, if you're trying to trade today, you've missed the move. It's already happened. And now it's too unpredictable to catch again. We have come into a fair value gap over here though. So, if you want to trade that, you can. I wouldn't, simply just because it doesn't align with AMD or anything like that. But if we just go on GJ, just have a quick glance at that. Alright, so we have started completely disrespecting that. I thought so, because that bullish candle on GU was quite strong. I thought that was the GBP, and it was. So we're not going to be trading the GJ today, guys. If you're here to try and catch a trade with me, that's not happening. We're not going to be trading today. What I'm going to do is I'm going to have a look at the Euro USD, and then that's probably going to be the end of it. We've got news coming out in about like 10 seconds for me. So we'll see how that goes. Okay, I think that's the anticipation of this news. So GBP USD, you want to wait for an accumulation before you try and trade again. You've missed today's move, basically, is what I'm saying to you. Now, on Euro USD, we have been consolidating for a while. Now, what's happened here? So this is, it's pretty safe to call this an external accumulation. Then we've took out external liquidity over here. During the manipulation, almost into a fair value gap. Almost into a fair value gap. But this, again, guys, it's so systematic. It's so simple. I don't know why you're not using this. So we've got this external accumulation, yeah? Then we've got an external manipulation, taking out the liquidity, which is also external and internal, lining up. Another strong confluence. And then we have basically just completely bounced off that. So what we're expecting now is the distribution move to the upside. Something like this. Now, in terms of targets, where are we targeting? Previous highs, simple stuff. We can target that up here. If you want, you can go to a high time frame and look for a fair value gap. But it doesn't look like there is one, to be honest, guys. I'm not seeing anything. We've got long wicks on these bearish candles. But yeah, accumulate, manipulate down, take out liquidity, sell side liquidity, and then now we are continuing up. Now, in terms of an entry, how would you actually enter this trade? So what you want to do is you want to wait for a fair value gap. That's basically it. You want to wait for a fair value gap on the same time frame that you've identified the structure on. So how would that work? In this circle, you can see we are currently on the third candle of a bullish fair value gap. What makes a bullish fair value gap? The expansion candle. The expansion candle here, extremely bullish. This is the top wick of the first candle. And we need to make sure that the bottom wick of the third candle doesn't go lower than this point. If it doesn't go lower than that point, then you have a valid fair value gap. And what I'm going to do is I'm just going to draw that out for now, so we can see how price is moving. And this is exactly how I would trade. So let's say in a perfect world, this is a fair value gap. This is a valid fair value gap. Price closes exactly how it is right now. I would wait for price to come back into here, and then pretty self-explanatory. Take that buy position from the fair value gap, targeting an old high with my stops just below here. Simple as that. That's what I'd look for on EU. Mohammed. I hope that explains it. GU, you want to wait for an accumulation. EU, we're going into the distribution move now. And on GJ, we are currently we currently have no idea what we want to do. So we're staying away from that. But yeah, that's it, guys. There's nothing else to do now. I've gone over the fundamentals, gone over the technicals. I've seen, obviously, we've looked at the weekly, a higher time frame, but we've also looked at what we want to see today. We identified what we wanted to see today. We were waiting to see if the market would give us what we wanted to see, and it hasn't given us what we wanted to see. So the best thing to do in this situation is just to take a step back. We've missed the good move which we would usually catch. We've missed that good move, so we just need to practice good discipline now. We were trying to catch, the remainder of the distribution move, but unfortunately, it doesn't really look like we're going to be able to catch that. So it's safer just to stay away. I've had 2 weeks from no trading, so you can imagine how easy it is for me to just practice this discipline, and that's something you need to do with yourself as well. Just practice not taking a trade. It's actually a lot easier to stay disciplined when you're used to saying no to things, no to trades. We've got a fair value gap here, which we have come in and respected, though. But as I said, I was waiting for price to respect this one and disrespect this one. But it's disrespected this one and respected this one. So I am out of the trade, out of the market. Not trading today. Now, I think I've just seen someone say gold. No problem, Mohammed. Anytime. And I will have a look at gold now. Right. Let's have a look at gold. Okay. Gold's been really messy the past couple of weeks, I think. Alright, what is going on over here? Is this my old analysis? I think we did an analysis a few weeks ago, didn't we? Right, okay. So, what's been going on here? Pretty self-explanatory again. On the weekly, we have got a accumulation right here. So we have manipulated up. Now if we go to the monthly, I think this is uncharted territory. We haven't really been here before. And that is right. I think 2.5k is mental. I remember literally a year ago it was 1.7k. Literally a year ago. What is it? Yeah, look. 1.8k a year ago. and now it's 2.5k. That's ridiculous. It's mad that. But yeah, so we've got that external accumulation, which means we've had an external manipulation to the upside, which means we're looking at an external distribution to the downside. Now, in terms of where, we can do the same thing we've done multiple times today and draw up 7,000 fair value gaps, and then look at the one that we need to look at. So we just draw all these out. You know, you can see these are back to back to back fair value gaps here, one after the other. We did in fact come to this one, respect it and continue up, but this is where we want to be targeting for the distribution move. So we just draw that out now. Now, which fair value gap? Do we go for this one or do we go for this one? Neither. We go up a time frame and look for a fair value gap, which isn't really the best thing. So we've got this fair value gap here, massive fair value gap. So we're not going to be trading to this one. We're going to be trading to this one because it's inside that fair value gap. There we go. Easy as, guys. That's external. That's going to take a few weeks to play out. But if you look more of an that's external. If we look more of an internal time frame on the 15-minute or something like that, you can see we've basically just been consolidating here as well. Consolidating. Now you can see we had a consolidation here, manipulation, distribution. Distribution wasn't too big. It did come into this fair value gap over here, I think. Now we've had our accumulation again right here, which means we're looking at manipulation next phase. So in terms of manipulation, where could we manipulate to? The best bet is up here. Take out this liquidity. That's that, to be honest with you. You know, I'm not saying we're going to manipulate up or down. What I'm saying is you want to wait for manipulation to take place, and once we've manipulated, just trade in the opposite direction. That's pretty much what I'm saying. If we manipulate up, trade down. If we manipulate down, trade up. How do you know it's manipulation? Because it's the first candle to close outside of this range. That's it. So with gold, you know, you want to be looking for price to manipulate, and then once it's manipulated, you can start looking at some sort of trade. But Davy, excuse me if I'm wrong. Honestly, you're better off sticking with one of these, GU or gold. There's no point looking at both. You're basically just trading the same thing. You know, when it comes to the USD anyway. But yeah, I got nothing else to say, guys. That's the gold analysis. Wait for that manipulation. On GU, you've completely missed the move, so just sit on your hands. On EU, we are looking at a distribution move. We just want to wait for that fair value gap to be formed and respected. Now, on GJ, we have respected this fair value gap, but we have, you know, invalidated both of these things. So I am going to be sitting on my hands today, guys. We can see how this plays out. I'll obviously post about this in the Discord. I'll just see how it plays out anyway, regardless of what happened. Regardless of if I'm taking a trade or not. But that is pretty much it, guys. We've gone over the fundamentals. We've gone over the technicals for multiple pairs. But yeah, I'll catch you guys tomorrow. Don't forget to like the stream. Don't forget to subscribe and join the free Discord server if you haven't already. And more importantly, there's going to be some nice, massive news coming out soon. We've got like weeks of news, not fundamentally. Like, I've got big news to share with you guys. I think you're going to be very excited for it. I think you're going to be very happy with it. I think it's going to provide endless value. So make sure you are in the free Discord server, because that's where I'm going to be announcing it. Make sure you're in the free Discord server for when I do announce it, because I do not want you to miss this. It is an opportunity you do not want to miss. It is free, and it will provide endless value. Now, let me just... God, which way do you prefer to stick with? As a beginner... Well, when I was a beginner, I'm not a beginner anymore. when I was a beginner, I did trade every single pair. Now, in your case, if you're the beginner and you're trying to find a pair to stick with, I recommend trading a pair with the an Asian currency inside of it. So, a few students in the premium, they trade AUD, USD, GBP, JPY, Euro, JPY as well. I think someone trades that. And that's because we've only got one strong currency. So I can go into this, but I think I'd rather make a video about it. What I'm going to say in short is a strong currency is when there's news or the market opens. So when New York Open happens, the USD is going to be the strongest currency. When London session opens, GDP is going to be the strongest currency. When Asian session opens, the JPY, the AUD, they're going to be the stronger currencies. So not only is it the session, it's also the news, it's also just the relativity with the actual pair that you're trading. So if you're trading like the AUD GBP, like some random GBP pair, it's not really going to have that much volume in it. But if you're trading, the Euro USD, the GBP USD, the GBP JPY, GBP USD, trading all those things with the GBP in it, when London happens, it's going to open. Sorry, what? When London opens, it's going to move drastically. It's going to have that volume coming in because it is a bigger currency. It's a strong currency. Now, with pairs like the GBP USD, the Euro USD, where there's these big pairs together, it's basically just like a tug of war. That's the issue. So with the GU, with EU, it's like a tug of war because there's these two strong currencies trying to battle for what direction they want price to go in. Now, this is a really deep loophole, not loophole, rabbit hole. I can go on about this. I'm trying to figure out the easiest way to talk about this. Basically, every currency has a base currency and a quoted currency. The base currency is the first one, the quoted currency is the second one. Now, a Forex pair has a positive correlation. The base currency has a positive correlation with its index. The quoted currency has an inverted correlation with its index. So, the GBP USD, the USD is the quoted currency, which means the USD has an inverted correlation with the USD. So when the USD goes up, the GBP USD will go down when the USD is strong. Not when the GBP is strong, but when the USD is strong. And when the GBP, the pound itself, when that goes up, the GBP USD will go up if the GBP is a strong currency. Now, in the Asian pairs, you do not have to worry about strong currencies because if you're trading London session, GBP, JPY, you're not going to have to worry about JPY being a strong currency, are you really? So you can understand where I'm thinking there, how I'm thinking about that there. So you want to trade an Asian currency pair, basically so you don't have to worry about the strong currencies, so you don't have to worry about the tug of war kind of thing, and you get more efficient moves. Now, if you can go on a graph, I think it's on baby pips somewhere, but the GBP JPY moves the most on average. On average, it moves 80 pips. Now, that's not 80 pips up or 80 pips down. That's like it could consolidate in a 10 pip range, but it's gone up and down 8 times, which means 80 pips. So the GBP JPY moves the most, and that's because we don't have to worry about this tug of war between two currencies. We've just got one currency dominating basically 24/7. So it's easier. So, Mohammed, to answer your question, just pick any pair with the JPY in it, really. That's pretty much it. You can trade this if you want, obviously. You can trade USD JPY or Euro JPY. I reckon GJ or EJ, not UJ or USD JPY, because that's basically just the DXY. But yeah, pick a pair with an Asian currency in it. Gold and NAS 100. I'm not going to look at NAS 100 because I'm done with this stream now. There's not really much to worry about. We've done gold. We've done gold, guys. We've done GU. We've done EU. But that's it. Mohammed, as I said, pick a pair with an Asian currency inside of it, and you will start winning more trades. It's a lot easier to navigate. But that's it, guys. As I was saying, make sure to like the stream, make sure to subscribe, make sure to share, whatever it is, all that stuff. You know what I'm talking, the YouTube business. Make sure to join the free Discord though, really, because that's where I'm going to be announcing the next piece of news. So the first piece of news was that I'm doing these New York streams. Now there's something else coming, and I'm going to announce that in the free Discord server. So if you're not in there, make sure you are. Make sure you follow me on Instagram, all that stuff. But I have nothing else to talk about now, guys. I'm done for the day. I'm going to go continue my day and do something. I'm not going to sit here staring at a chart. And if you're going to be doing that, you shouldn't be, really. But no worries. Thanks for tuning in, guys. And as always, have a lovely rest of your day. And I will see you the same time tomorrow. But that's pretty much it.